Arun, perhaps you could start. We've had previous episodes over the last 20 or 30 years of technology disrupting the world in a way that appears scary at first, but with the benefit of hindsight, less so. What's the lesson we should draw from that?
Well, I guess the key lesson is that as the capabilities of digital technology grow, they threaten sort of existing business models and the regulatory structures that have sort of been set up to either support or protect people who operate within those business models. And there is a process of regulatory readjustment that we go through as we try to figure out what does the government need to do, what can the market take care of by itself. And this is often sort of influenced by the incentives of different stakeholders. I mean, people who are wedded to the existing business model will try to protect that, will try to sort of protect perhaps even the inefficiencies that cause their business model to be successful. And so, if you look at the last 20 years, I mean, we've gone from having, a couple of special purpose networks and these special purpose devices, televisions, telephones and our telephone connection and our cable connection, to having a wide variety of sort of general purpose devices in each home and a general purpose network, the internet. So what this does is it sort of frees up a whole bunch of capabilities, decentralizing them. We saw voice over IP threaten sort of regular telephone service when the network to the home became general purpose. We saw Napster emerge and threaten sort of like, the business model of the music industry when the ability to take the effort that someone had put into creating a collection of songs on their hard drive at home, sort of became sort of visible to everybody else. We are seeing a wave of disruption now that has to do with not just digital products, but with sort of products that are based on, not just the effort you put into digitizing your music, or sort of writing your website, but the assets that you own, the space that you own, the car that you drive, like, the solar panels that are on your roof, start to sort of become accessible through these general purpose devices. And so, I guess the lesson is that, markets can take care of certain things. The extent to which they can take care of those things depends on the business models. And so government systems are set up to correct these market failures. But when the business models change because of digital disruption, what the markets can take care of changes. And so the role of government in sort of like correcting these market failures also has to change.
James, I wonder if you could give us a sense of what the worst case scenario is here in terms of regulation. It seems at the moment there's a building backlash against some new digital industries. Uber obviously has attracted a lot of hostility. If you look in Europe, the European Union is battling Google and Facebook. I think the Germans have even come up with a phrase called platform capitalismus, which describes a world of alienation and pain ruled by Silicon Valley tycoons. Before we go on to talk about how we should change rules, what's the worst case scenario? Is there a building backlash as people feel out of control?
So I think what's building is how the gains of technological innovation are distributed in terms of access to opportunity, access to growth. I think that's the biggest risk is for policymakers is this top 1% and who's actually benefiting. I live in San Francisco, and I think with Uber, there's kind of a strong feeling amongst people that maybe they don't like the company, but they love the app. And so everyone still uses the app, loves the app. It's so frictionless. It's amazing. So the company is successful. And even if the state of, or the city of San Francisco is going to sue Uber, they make sure to tell everybody, well, we're not going to shut down the service because we know everybody loves it. So I think the next wave of discussion is going to be really about, okay, these great benefits and gains that we're seeing in our society, how do people benefit? How do all levels of people benefit? And I think that's going to create a whole another layer of regulation and policy making. In financial services, we see tremendous opportunity now as a result of Dodd-Frank and all of the things that happen, because banks are just so, in some ways, stifled by, unable to take risk, and they're, the places that have all the capital and people's deposits, and they're kind of enabled to kind of put that money to work in new markets. So in the fintech community, we're seeing tremendous opportunity that's kind of been born after 2008 because of the crisis.
Susan, you've gone from the technology world to Washington, D.C., a probably very abrupt transition. What have you found there? What's the level of knowledge about how to regulate this new world, and what's happening there?
Well, I probably don't have to tell anyone that policy is very out of date, moves very slowly compared to the innovation that we see and technical innovation. And as a result, we have many cases where policy is very much out of date. People don't necessarily understand and have the future vision of where policy should be, so that they are creating an equal playing field for the future and inspiring innovation in the future. And we do have a place where a lot of folks aren't all using their smartphone for their schedule, or using technology in a way that you might see many consumers.
Maybe the last bastion of the Nokia is Congress.
And so we need those folks to be educated and informed, so that policy actually does work the way the world works today.
What are a couple of examples of where laws are or rules are hopelessly out of date?
Well, one that we've talked about a lot recently is the Electronic Communications Privacy Act. That was written in 1986. I started working on email at Microsoft in 1989, and that was back when email was just intranet email. People could send mail to other people in their workplace, but we still weren't exchanging email between individuals, especially consumers. And we still have a law that says that you have a warrant standard for information that might be a piece of paper that's in your desk drawer, but we don't have a warrant standard for access to digital information that might be up in the cloud. The Electronic Communications Privacy Act was written again in 1986, and we're talking about updating that now, but clearly a lot has changed since the way electronic communications worked in 1986 and the way they work today. And so we've had a couple decades where we're behind, and we need to put policy in place that not only is up to date, but also is future looking, so that it's not blocking innovation in the future.
And do some of the political debates that have happened in cities and states, for example, about hotel regulation, Airbnb in New York, has that filtered to DC as well? I mean, is there a discussion going on about the sharing economy? And
Well, definitely one good example would be something called the Marketplace Fairness Act, which is looking at internet collection of sales taxes. It's become a big issue because state and local governments rely on sales taxes. Local brick and mortar businesses have to collect those sales taxes, but out-of-state online retailers don't. And so you have a place now where sometimes a local business may be at a competitive disadvantage to an out-of-state online business because of the sales tax differential. And that's a piece to address that. There needs to be federal legislation so that, once again, we have an equal playing field and policy isn't creating winners and losers.
And on the quality of the existing laws, if 0 is terrible and 10 is a set of regulation that's fit for purpose, where do you think we are?
Well, I think we're very behind. And so if you look at whether it's on things like taxes, whether you look at privacy, where we're very behind, spectrum and what we're going to do on spectrum going forward. There are a lot of areas where we aren't forward thinking right now, and we need to be, and that's going to be important in these next few years as we update a lot of legislation.
Arun, I'm going to turn to you in a second, but first, James, if you're an entrepreneur, does this out-of-date system present an opportunity, or is it a problem, or a mixture of both?
It's a mixture of both, but I think for most it's a tremendous opportunity, because I think one thing policymakers could do is just follow what the entrepreneurs have done to kind of work around it. So one example is in the lending space, every state has different like caps on interest rates that you can charge. And so what's happened is, if I want to lend online and provide a great kind of experience to anybody, there's basically different regimes in all 50 different states. So what do folks do? Well, how do I get around this? Oh, well, I'm going to go kind of, rent a charter, so to speak, from one bank that's in one state that has no cap and can export that, kind of regime to all 49 states, and they'll go do that partnership. And so when you find, startups, I think, really try to, when I started the first company, I did not want to be a bank, because if I was going to be a bank, first of all, as a startup, the list of laws were this long, and
right.
But I wanted to get out and try and help people and lend to them, and so I chose to be a non-bank. And so what we're seeing now is, particularly, I'm speaking about the fintech community and lending, and there's like tons of new companies trying to emerge to fill this gap in lending that banks have left behind, I think, as a result of a lot of the new regulations. So it's more opportunity. The second thing you're saying is, how do you fund those loans? There's now a model of peer-to-peer and marketplace lending where you can do crowdfunding, and instead of having depositors, you can just have a group of people come in and finance those loans. And that's another wave, I think, that's as a result of regulation in one area, then innovation pops out in another.
Do you think it's too cynical to say that many new digital businesses are based on regulatory arbitrage? That is the raison d'etre?
No, I think fundamentally they're based first on a consumer problem, or a business problem, and how do I solve that? And then, as you kind of research that problem, how you scale, you find these roadblocks, and really, you just, as an entrepreneur, you figure a way around. It's usually more the, let's just do it and ask for forgiveness later approach. And I think in some cases, some policies, some laws have allowed for that, where you can just go innovate, provided that you're trying to improve social good or consumer good in some way, and then come back and reassess what the policy should be.
So it sounds like even if some nimble companies are building new businesses, there is a bit of a vacuum in terms of law. That begs the question, Arun, what is the objective of regulation of disruptive technologies? It could be to protect privacy, protect national security, to help innovation, to ensure tax is collected properly, to protect labor markets. There's a bewildering list of possible priorities, and how on earth do we decide what the most important ones are?
Well, I mean, a simplified way to think about that problem is to say that there are certain objectives that society has. In an economy like the United States, you tend to look to the market initially as a way of fulfilling those objectives. Some things the market can do well, other things it fails at doing. Sort of a sufficient number of wheelchair accessible taxis, sufficiently safe, sort of fire safety instructions in short-term accommodation. These are examples of market failures. And that's where the government steps in and sort of says, we need to sort of correct this. And so whichever sort of context you're looking at, if you're looking at labor laws are good if they are correcting something that society wants, like, sort of workers' compensation, but that the market hasn't provided on its own. The privacy laws are needed if sort of like, the division of rights between the people who are collecting your data and you isn't sort of the right balance for society. Intellectual property laws came out for the same reason, to sort of like, correct these market failures. And so I guess sort of a principle underlying that philosophy is to let the market try and sort out some things for a little while, and to make government intervention surgical rather than to sort of do it the other way around. And I think in different contexts, you sort of see people saying, well, we need to sort of impose existing labor laws on the new freelance workforce, or we need to impose existing taxi cab laws on the new sort of Uber models, existing hotel laws on the new Airbnbs, existing telecom laws on the voice over IP providers. So, that's a natural response, because there's always a reason why these rules were created in the first place. But it may not be the right sort of long-term solution, and somehow sort of delegating some of the responsibility to sort of new stakeholders is often sort of like, the right path to go down. I just wanted to add something to what James said. I agree with you completely that I think that the emergence of a disruptive technology and a new sort of business model emerges from fulfilling a consumer need first and foremost. But it often seems like the case that the consumer need is sort of created in part by flawed regulation in the past. So the consumer need for Uber, I think, was created by taxi laws. Perhaps the consumer need for Napster was created in part by sort of a regulatory structure that favored selling 15 songs on a CD for $15 rather than song by song.
James, do you want to respond to that quickly?
I was gonna say I think you're very right about that. Like, for example, it's a micro economy, but say California, I'm still a large economy, but in the lending law in California, this is if you're going to make a loan from above $2,500, there's no cap on interest rate, but between $250 and $2,500, there's severely low caps. And the thinking was, back when they set this up, is if you're asking for a big loan, you're pretty sophisticated, so we don't need to protect you. But if you're asking for a small loan, we need to protect you. And so that protection results in people don't have any offers because no one thinks they can actually make money lending, at that very low rate. And so then they're just stuck with getting kind of, a guy on the corner, or, what have you. And there's this, kind of externality because of the regulation. The only other thing I was going to say is the surgical approach. I don't think that exists in Washington because problem is everything happens in this massive comprehensive thing to actually get the momentum to get passed. And if that's the case, all it does is overshoot the other way. So because everyone has their thing that they have to get into that bill and tack it on, and by the time it's done, you ended up doing like 182 things versus the one surgical thing.
Yep.
Because just to get anything done through, obviously you would know more, but through both sides with all the politics, it seems like it's very hard to do anything surgical.
Susan, perhaps you could touch on both the unpleasantness of the legal law creation process, but could you just also touch on a sense of what our guiding principles should be about regulating this new disrupted world? How should one prioritize your objectives?
I think part of it, and when you're talking about surgical strikes, part of it is the framework that some of legislation's based on is out of date. And so and that's probably the hardest thing to fix is when you look at things like telecommunications. We have telecommunications companies and internet service providers and cable companies, and yet now we have folks who really span all of those. We don't necessarily have these silos that regulation was built on originally. Now the question is, how do you really change the framework that policy was built on top of? And that is opening up a big challenge for folks, and obviously there are winners and losers whenever you change things because business models were built on a regulatory environment that exists today or legislation that exists today. And so that's probably the hardest thing. Actually, point changes, which is what you see in many cases, happen more often, but then you're trying to take a framework that's out of date and make it work. And at some point, you can't do that for decades and decades and have that still work. And that's probably where we have a lot of challenges right now is really looking at where things are, looking at legislation that might have been written back in the 1950s or 1960s and realizing that framework, that basis might be wrong and maybe we need to start over. And yet that's a pretty heavy lift given the challenges we have to get any legislation through in Congress today.
How much lobbying is taking place? I think the Uber, I believe, now has about 200 lobbyists. I think Google is now one of the largest lobbyists of any company in the US.
Well, I think
what sort of effort?
The tech community is much more involved now. Clearly, early on in technology,
you get asked for nice lunches a lot more.
Folks would say, "Hey, I don't," they wouldn't worry about what was happening with policy because they didn't think policy really impacted a lot of technology. I think now most tech companies realize that a lot of what they do may be impacted by policy or may be at odds with policy, and they need to proactively be engaged and involved. When we look at intellectual property policy, music is a great example someone was talking about earlier. We have a copyright law that was written in 1976. We've started to discuss the copyright law. When we talked to the registrar from the Copyright Office, she said the law that was put in place in 1976 took 15 years to negotiate, so it's probably out of date by the time it got implemented. So now we're having a lot of hearings to discuss that, but again, there's a whole area that hasn't been fundamentally changed in many years. And really, it's not about changing things for the sake of changing. It's about making sure things are up to date, taking the knowledge we have now, and again, trying to provide a policy framework that inspires innovation, isn't necessarily focused on a particular business model, but allows that innovation to happen and different business models to thrive.
But it's fair to say there's a huge amount up for grabs for the companies. Arun, you're a leading proponent, I think, of sort of self-regulation, the idea that the government should set a broad framework and then rely on companies to enforce things like tax standards and tax collection and so on. At Davos a couple of weeks ago, the chairman of Deutsche Bank, Mr. Achleitner, compared the technology industry to the banking industry 10 years ago, saying that it lived in a delusional state where it thought that there would never be a public backlash, that it could regulate itself, and that eventually all of that, this would end in tears. Do you think that's a fair point? Does self-regulation ever really work?
Yes, it does. And I think that, just to sort of tie it back to the point that Susan was making, because the pace of sort of regulatory or legislative change is sort of, by design slow, and perhaps, maybe that's the way that it should be. What ends up happening is de facto there are alternatives that are created that sort of start to create their own sort of regulatory systems. And I think the case of music and copyright or books and copyright is a good one, because right now when you buy something through iTunes, you're not sort of, the division of rights isn't being mediated by copyright law anymore. It's being mediated by common law and a contract that you're signing with the iTunes platform. So we've sort of taken the responsibility of government and we've given it to iTunes. And it's the same thing when you buy a book through like the Kindle platform. A private company has now sort of de facto been given the responsibility of the government. And so I worry that if we let this system sort of like, where you've sort of got this alternative that is being created that is sort of bypassing laws that are actually really important, intellectual property laws are tremendously important, that an alternative would be to sort of take a more sort of framework-setting view from the government's point of view and sort of actually set up systems where you're explicitly delegating regulation to the private companies. And I'll give you a couple of examples to sort of to illustrate this. I think that platforms like Uber and Airbnb today have access to sort of an immense amount of data, sort of micro data about our behaviors, right? And this creates the opportunity for them to come up with better solutions to societal needs, like preventing discrimination based on ethnicity in your choice of providers, than a government law could ever do. I mean, because they've got the enforcement capability, they've got the data science, they've got the data. And so perhaps an approach where we set the guidelines and then delegate the responsibility with some sort of compliance and auditing system to these platforms could be better than trying to change the laws and the enforcement capabilities of the government themselves. It's the same thing with hotel taxes. I mean, I think that the scale of peer-to-peer business is so immense now that expecting the government to actually sort of implement a tax collection system seems so much inferior to simply delegating it to Airbnb and letting sort of them be audited periodically the way that we have public companies audited. And so, if I look back and sort of at historical examples, it seems like, yes, there's a credibility problem with self-regulation in financial services, and that's one really important sort of guideline for future self-regulation, which is that you sort of like, the self-regulatory entity needs to establish credibility and a perception of credibility. It's sort of like, I think perception is as important as sort of reality here. I mean, I think another thing that's really important is to sort of demonstrate enforcement early on. And the example that I point to in the context of sharing economy discussions is the nuclear power industry here, which is largely self-regulated. The INPO is sort of the self-regulatory body.
It had a slightly less happy ending in Japan.
Yes, but in the United States, you had the example in the 80s in Philadelphia, and they sort of showed their teeth through sort of like, their enforcement there. And so, these seem to be, and there's a third dimension that's coming up because of the advent of digital technologies, and that's the power of reputation. Because often regulation is set up as a response to a lack of trust in exchange. The cotton industry provides a great example of sort of reputation driving things. We've got modern platforms now that have set up this amazing trust infrastructure, and that may sort of reduce the need for government interventions into things like, in taxis, driver inspections, medallions, things that were needed to establish trust may be provided by the market themselves. So all of these elements where you've got sort of digital technologies creating these new infrastructures and giving individuals these new capabilities seems to point to a model where if sort of the government doesn't set up something that is partially self-regulatory, the market will create its own sort of self-regulatory system in the way that iTunes and Amazon have for like books and music.
So this could be an era when the state delegates more and more functions to platforms to execute on its behalf. We're almost out of time, but I'd like to touch very quickly on two issues which I think are close to our panelists' heart. The first is privacy and government snooping. And Susan, you've been heavily involved with trying to pass legislation to deal with this. I wonder if you could give us a quick snapshot of what's happening.
So we worked very hard in the last Congress to put forward legislation to rein in the NSA and end bulk collection of data. That was a piece of legislation called the USA Freedom Act. It's actually a long acronym, so you can look it up and get, someone made it work. But that legislation went through the House, did not make it through the Senate, and it's really revisions to the Patriot Act and the way the Patriot Act was interpreted. It was interpreted much more broadly than many of the authors of the Patriot Act ever thought it would be.
And the Patriot Act is sort of post 9/11, anything goes.
Yes, to kind of allow more information to be available so that people would be able to detect threats more easily. But it has been used much more broadly than was anticipated in the legislation that was written. We tried to rein that in this piece of legislation called the USA Freedom Act, and that's something else that we will be working on again this Congress, since legislation did not pass last Congress. It is an important piece of legislation. It is something that's very bipartisan. I'd say one thing about all of the issues we've talked about, in many cases, a lot of things like intellectual property, et cetera, these aren't partisan issues. Sometimes it's really more about people understanding the implications and learning, and we've seen a lot of learning around the issues that have come up with respect to surveillance. So my hope is that allows us to have a broader coalition of folks who will support legislation.
And when might that happen?
The Patriot Act will expire in June, so there will be a lot of kind of impetus around coming up with something, given that there's a June date there, and that might be an important forcing function for legislation.
Second very quick issue. James, America has mad immigration laws. What's it like running a business dealing with those?
So my first company, Progreso Financiero, it's now called Opportune. We wanted to bring the concept of micro-lending to the U.S. Latino population, and we ended up serving a lot of undocumented immigrants who are here working hard and wanted the American dream and wanted a hand up, not a handout. So we certainly, as a company and as our own individuals, had a lot of values around helping that population. I'm involved in a group in the Silicon Valley Leadership Group. So we bring people to Washington that are CEOs of tech companies, and I always would be in the group and everything H-1B and let's get high-skilled workers. And I was always the one guy. Well, that's great, but we also need to recognize the people that are here, that are working, helping service industries, and just giving them status so they can stay. So obviously, from the last company, felt very strongly about that. And I still think it's something that you think of this concept of we have a free flow of capital, if you have free flow of labor, that's kind of, I think, more of the future. And so, yeah, so I'm a big supporter of that. I will say just one thing that was said earlier. In building Progresso and now my new company, InSeek, in general, always trying to solve opportunity access. So it's capital access. How do we give access to capital to people? I found that in Sacramento and in DC, I ran up against kind of two competing interests. One was the urge to protect people, protection. These are lower income people. They're not smart enough on their own. We have to protect them from all the evils. And then kind of where I was of like, no, we actually have to give them more opportunity. And so what I would love to see in the future are companies taking those matters into their own hands and legislation and bills around, instead of saying, let's tax the top 1% and so on and so forth, how do we actually create incentives for companies to because I believe that the companies are, when you take self-regulation that serves so many people with marketplaces, and that we can actually help to solve a lot of the opportunity access problem in America. So I found that those two competing interests should be more aligned instead of competing in our work.
Susan, very briefly, any chance of immigration reform in the next year and a half?
My district is a great example. I have a lot of, just outside of Seattle, all the way up to the Canadian border. So we have a border. We have a lot of agriculture and a lot of technology. And we talk to business leaders, farmers, farm workers, faith-based community, law enforcement, across the board. People have asked for comprehensive immigration reform. We introduced a bill. I helped lead a bill in the House last cycle called the HR 15. It was a comprehensive bill. And similar parts to what passed in the Senate. That legislation never got a vote on the floor of the House of Representatives, and I think it would have passed if it had a vote. So I do think that it's possible for us to get legislation through, but we need leadership to let us vote on that legislation and give it a try. We've had some ugly hearings already at the beginning of this Congress on immigration reform, which is unfortunate because I think it's important and critically important for people, for business, and we need to move forward. And so I'm hopeful, but I know it's going to be a challenge.
Hope springs eternal. Questions from the audience, please. I think there is a couple of microphones roaming around. There's someone at the back there, I believe, with a hand.
Hello, thank you so much for this panel. It was definitely very interesting. This question is for you, Suzanne, in particular, but opening into the floor as well. You mentioned the Electronic Communications Privacy Act, and I think that privacy regulations are a perfect example where there is a difference in pace between regulations and innovation. And we are not only seeing a change in the way we send emails, for example, but we are seeing the cloud, we are seeing emerging technologies, we are seeing location tracking, etc. So could you talk a little bit about the risk management that comes with that difference in pace between regulations and company innovations? Thank you.
So it's a great question. We clearly have the world working in a different way today with respect to digital information, and policy isn't consistent with policy that's in place for physical information, like a letter in your file drawer, where you need a warrant to access that information. You don't need that warrant for information that might be stored in a cloud or geolocation information. Just this Congress again introduced legislation to update that, to say that digital information should have that same warrant standard, and also geolocation information. Because we know that as people start adopting location-based services, they also want to understand and have a sense of what's going to be how that information is going to be used, whether it's from your phone or your car, et cetera. The challenge we have is I think most people assume that policy is consistent on different platforms and don't realize that we have an inconsistency in policy. So part of it is work that we need to do to make sure that consumers are aware that their digital information, that exact same information they might have in a physical form, the digital information is held in the same regard with respect to, for example, a warrant standard. And so part of the challenge we face and part of the challenge that businesses face is that their consumers, their customers assume sometimes that there are laws in place that aren't quite there yet. And I think we've had a very strong conversation around privacy and information and data. We just started a caucus in Congress called the Internet of Things Caucus to remind people and educate lawmakers that there's a lot more connected devices out there with many more different types of information than just what you have on your phone or your PC, but on your Fitbit or wristband or in your car or on your thermostat, and to try to make sure that our laws are consistent with that. And
Can I just add to that real quick? Because I think that this is sort of, this is an issue that sort of makes me really scared because, we've put so much thought into the permissions that a government entity needs in order to sort of observe people without their consent, right? We're sort of, this is based on an assumption that somehow the government is the entity, the only entity that we give this power to, and then we put in place a set of checks on sort of when this power can be used. But now we, over the last few years, we've been living our lives online in these digital spaces, and de facto we give that sort of power to the person who owns the platform. And so when the conversation is around when should the government get the information from the platform, I think that there's a larger issue here that we have in fact given this power to the platform, and we're relying on their sort of good judgment and their sort of sensibilities to not abuse this information. And the point you make is sort of a really important one, because now we're extending this reach outside of Facebook or outside of Google's platforms and into the physical world. And so our ability to sort of observe people without their consent, or in some sense, has expanded. And so, to me, it's sort of critical that we sort of come up with a framework to start to think about how do we limit the powers that we're giving platforms when we allow them to observe us without our consent in both digital spaces and in physical spaces.
And make sure consumers are aware and are able to make an informed decision about what happens to their data.
Yep, because it's sort of, it's almost like, the implications of privacy violations in the future are sort of largely unknowable. And so coming up with an effective, at least from a personal point of view, an effective risk management strategy is really hard, because it's hard to even sort of conceive of the events associated, with these risks, right? What are the bad things that can happen? Right. And so it's frightening to me to think about delegating this responsibility to consumers and saying you make effective choices. This really does seem like a situation where some kind of systematic government oversight would actually be beneficial to society.
Susan, do consumers need protection from platforms as well as government snooping?
I think right now, one of the biggest issues, and many people here would probably see some privacy agreement that they had or a statement that they were supposed to read when they were signing up for a service, and most people check those and move on, and so they don't really understand how their information might be used and what may be happening with that, or what controls they might be able to use to kind of opt out of their information being used in certain ways. And so part of that is how do we present that, put together the framework so that people really do know what might be happening to their data, and they can make a decision on whether they want to expose that information more broadly or not. But right now, I think it's hard for folks to understand how to do that.
Yep.
And now it's because people are using it, like you said, day-to-day in social media, et cetera. people more and more are becoming aware of some of these challenges, and I think that will be helpful to that conversation. But now there was just a report on people's cars and the information coming from their cars, and you know, if you think about home security systems or thermostat, you know, in your thermostat, all the types of information, healthcare information becoming more and more available. Now it's getting in other areas that people haven't thought about so much in the past.
Got it. Yeah. Could we have another question from the audience, please? I think the gentleman there.
Hi, thanks for a great panel. 2 questions, if I may. First of all, we've been talking about regulation and technology or innovation as kind of 2 opposing forces, but to what extent is there an opportunity for disruptive innovation to improve the regulatory and legislative process in terms of priorities, representation, or even efficiency? And a separate but related question on digital currency is in kind of how the state thinks about managing that process of divulging one of its most important aspects, which is having a monopoly over currency. Thank you.
Arun, do you want to take the first question?
Okay. Well, I think that I mean, part of the opportunity that is created by disruptive technologies is not to sound like someone who sort of comes back to the same point over and over again, but is sort of represented at the opportunity for delegated regulation, right? I mean, since we are creating these platforms that have these capabilities and we're interacting through them, there's sort of this third party now that is sitting between transacting individuals or interacting individuals. And so giving them some responsibility, I think, is an opportunity to sort of take the disruptive technology and to use it to sort of improve the overall regulatory process for society. So sort of transferring some of the responsibility. And to me, sometimes this is a superior alternative to a solution that involves open data. Because if you think about it, getting a platform or getting sort of like, you know, someone who's collecting this data to open it out as a way of regulation, saying that transparency will lead to sort of better behavior, I think misses the opportunity of being able to bring the capabilities that, say, Google has, or that Facebook has, or that Uber has, or that Airbnb has, to sort of process this data and actually identify sort of problems and correct them. And so that's certainly sort of part of the first. I mean, the second question's sort of a tougher one. That's a whole different sort of kettle of fish.
That's a different ballgame. I noticed our panel early this morning on deleveraging and quantitative easing concluded that central banks should cancel all the debt they bought from governments, thereby debasing the currency completely. So the answer to your second question may lie there. James, just to finish off, as an entrepreneur, can you do things to make red tape less of a problem? What sort of things, particularly in your industry, finance, are you making, in some ways, the burden of regulation disappear?
Yeah, so an example, and maybe to your question is, so this example I gave earlier in California, loans between $250 and $2,500. California's a fairly progressive state, so we took that idea to the legislature and said, look, you want to have more alternatives to a higher cost loan, which is a payday loan for all Californians who might be unbanked or underbanked to have more opportunity. Well, the problem is this is so restrictive here, you need to open it up. And so we had some members say, well, wait, you want me to raise the interest rate cap? And we said, yes, because if you raise it, more people will come in, can make money, and they can offer a solution that's much lower than all the things that you don't like. And so we actually created a law and took it through the whole process, and it was a pilot program. So I think members of the legislature felt more comfortable that, okay, we're going to let this go for 6-7 years. We're going to watch the data. It's kind of like, ask for forgiveness later, just innovate, and then let's see what happens. And then if we like the results, then if we've been able to create a whole new market that then competes with another one and offers consumers, and we define in the law what was actually a responsible loan. So you're doing underwriting, you're reporting to the credit bureaus, et cetera, et cetera. And then if they look at it 6-7 years later and say, hey, that was a good idea, here's the data, there's more competition, prices for borrowers have come down, so let's now make that a formal change, permanent change. So that's something that I led in 2010, And since then, there's been 2 bills to fix different parts of it. I think did something similar in Dodd-Frank to make sure it's more about playing defense so it didn't kind of kill the industry. But yeah, so I think there's great examples of doing that, and I'm finding now more and more as we engage in these policy circles, I think you're right, the tech community has really stepped up in the last kind of 5 years, and they're coming to a lot of these events and sort of have ideas about, okay, here's what we're trying to do. Let's go see if we can pass a law, because this law doesn't really apply to us, and we need to fix it so we can have more innovation here, et cetera, et cetera. So I think you're starting to see that trend, and certainly what we did in 2010 was an example. So
the entrepreneur is not just a victim or an exploiter of regulation, but someone helping to reform it.
Yeah, absolutely.
After America's industrialization in the late 19th century, it took about 30 years for the regulatory landscape to finally settle down. So I suspect it will be quicker this time, but we've only made a small start to that discussion. But I'm very grateful to the panelists, and thank you to the audience also. Thanks.
Thank you.